Another wild day on Wall Street with the Dow off. Well, when you look at a one-month chart, the Dow is off roughly about 10%. Remember, we peaked at the S&P 500 peaked on February 19th. We entered into correction territory. We go back and forth, but that gives you an idea of what we've experienced, and you can see the dramatic drop that took place after about February 19th, February 20th. So joining us is AlphaSimplex Group Chief Research Strategist Katy Kaminski. Katy, stocks are in correction, but you're saying that things are leaning more towards a crisis. What is the difference between correction and crisis?
So a correction is something that hits the markets that can recover quickly because we have some sort of means to actually get through this. Whereas a crisis is a much more sustained period where we see drawdowns that has a real impact. And where we are right now in terms of cross-asset positionings is that we've actually seen a lot of negative pressure in terms of some of the other asset classes outside of stocks, something that we have been watching since mid-January. So if you think about commodities, something that's much more fundamentally linked, those have really felt the brunt of what's going on right now. And then when you turn to bonds, obviously bonds have seen this type of movement since as early as January. So right now, we're definitely from a cross-asset perspective in terms of in other crisis events in the past, we're seeing some very similar trends. And that, to me, is an indicative that we may be moving into a more difficult situation than just February 2018 or right. Some of those other short-term corrections where there wasn't really a fundamental problem that we needed to solve.
So tell me what short-term versus longer-term means, because also what's characterized the initial descent here was the speed with which it happened, right? That was unprecedented. So what does that tell us about, if this is a crisis, how long it's going to take?
Well, the challenge is that each asset class has behaved so differently to this crisis. In fact, it felt in some sense that the stock market was complacent after what happened at the end of January. So we had a big correction in the stock market, catching up with some of the other markets we're seeing. So for me, the fact that we've dropped 10% doesn't mean that it's over. It really is going to be a function of what we see in the data. And frankly, the data isn't all out yet. We have a lot more things that we haven't measured yet. There's a lot of things changing in terms of policies and corporates and in terms of how they're handling travel and other things that we won't see until much farther into the cycle.
And Katy, I think this is an important point because there's a delineation between whether or not you see this as a V-shaped, a U-shaped, or an L-shaped recovery and what you actually expect from the coronavirus spread around the world, right? You can expect the spread to stop, let's say, by the end of the second quarter, but still see an L-shaped recovery or lack thereof. So I guess I'm wondering from your perspective, do you think that the shock already, even if tomorrow, for example, there was some miracle and the coronavirus just disappeared magically, where the damage was already done to supply chains, the damage was already done to both supply and aggregate demand to a point where it's just there's no way to kind of avoid what might be around the corner?
Well, I think the challenge is that we don't know yet and that we're going to see more and more of that data come out. But people are changing their behavior, and that as we see people stop traveling, as we see people making different choices, that has feedback effects, which even if everything was great tomorrow and we woke up and there was no problem, we still would see some of those effects farther down the pipeline.
So you look cross-asset. You mentioned you're looking at commodities and bonds and stocks here in the U.S. What about stocks elsewhere? And I'm thinking particularly of China and the incredible rebound we have seen in the CSI 300, the benchmark there. Does that tell us anything? Is that sustained? Is that just because of maybe buying on the part of the Chinese government, for example? What's going on there?
So, I mean, I will say that we've seen weaker signals in Asia than we have with the U.S. In terms of whether or not that's real or not, I don't know the answer. I mean, I think there are people that are having both sides. Some people are saying data looks good. People, Chinese investors are out buying the dip and the market is rallying and the government's taking care of things. But then there's other people on the other side of the fence who say, what of this data do we know? What data is not available yet that we haven't seen? And they're also pointing to some of the recent data points for manufacturing and some of the recent sort of numbers that have been a little concerning out of China. So I think that it's actually quite difficult to know, but there's two sides to it. Both, yes, it's great, it's getting better, and then there's also the view that we don't really know yet.
And just to let you know, we are roughly 20 points off of this morning's lows as we continue to fall on the Dow. Thank you very much, AlphaSimplex Group Chief Research Strategist Katy Kaminski. This month, as part of Women's History Month, we're going to continue to bring you women at the front of finance in this hour every day.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.